Hi guys. Sorry. There is me to share with you today. Okay. Hope you guys can hear me. So sorry for being late because when I wanted to push live, the internet did not want to connect somehow. Okay. All right. So if you can hear me, put okay in the comments so that I know that we are all good to go. Yeah. Okay, let's recheck again because I don't see comments. Let's share the screen. Okay. Okay. Today we actually want to talk about are we done on S&P 500? Are we dead? Are we dead or are we alive? Okay. Are you guys still alive or are you already dead? Okay. And uh, a lot have also given up. A lot have also given up. But of course, is that good news? And of course, cannot go down anymore. Okay, and let's check again because okay, thanks for is okay. Okay, so if you guys is the first time joining, welcome. The US stock market and using options, yeah, options. And if you want to learn about trading, this is a show where you can actually join a lot of okay, we are off again. Okay. Let me check if it is something wrong. I don't think I forgot to pay my bills, is it? I think I paid my internet bills. So it's just some disconnection. If I am connected back, please let me know if I am back on. Okay, so as I said earlier, the market is going down 7 weeks consecutively, and this on the S&P 500, yeah, and this has not happened since when? Since 2001, 2001. Meaning it's almost about more than almost slightly about 20 years. 20 years that we have actually not experienced this kind of downtrend consecutive for 7 weeks, yeah, on the S&P 500. Yeah. And of course, yesterday itself, we actually start to see that there is actually going to be an end to this streak. Okay, and it's only Monday. Yeah, please don't forget that 1 week we have actually 5 days, and we have another 4 more days to actually make sure that we can actually break this 7 weeks downtrend streak. Yep. And let's go to the charts where can actually see we can actually see where the market is right now. Let's go to the chart. Where's the chart? Hmm? Chart. I will come on, but please bear with me. You see the loading of it, which is still slow. Anyway, today S&P has actually up by 72 points, 1.86%. Yeah, and um, this is actually see something totally different. Yeah, that the market. I think immediately. I think this morning, early this morning, the futures has actually dropped about 200 over points, 200 over points, and of course, even right now, futures is still the S&P futures. No, the Nasdaq futures has dropped 200 over points. The S&P futures has also dropped 30 over to 40 points right now. Yeah. Okay, this is actually the chart, and S&P chart, and we were talking about 7 weeks down, right? 7 weeks down is actually here, where the internet is actually quite bad. This is the first time this experiencing this bad internet. Okay, you see the oh gosh. Okay, all right, it's back. Okay, so if you look at the weekly charts, this is where this is actually close to 19%, uh, 19%, 19 plus percent. Yeah. Of course, it actually dropped to, I think, slightly below, below 20%, which, which is actually a start of a bear market for the S&P, right? But of course, the market was actually pushing it back up last Friday, where it actually closed back above, and of course it itself saw the and let's get all this distraction away. Okay, so if you look at the weekly, it does not really indicate that we are actually the pattern, the downtrend pattern has actually changed, you see, because if you look at the the uh, 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 for people who just look at daily candle, right? We actually look at daily candle. It's totally, but we actually look at the daily last Friday at uh, on daily candle. So that means basically the market is going to be bullish. Short lived. The rally can actually be short lived. So of course, for those who is actually presents trades to actually go back long, right? There is still a bit of risk, as long as the trend and all these what is that? All these moving average continue to actually slope down. Uh, there is still actually a risk. But of course, the other thing is we can also go on a so-called V-shaped recovery, which I don't think it is actually which is actually possible in the COVID, what we had in the COVID, because the situation right now is slightly different as compared to what we had back in 2020. Yeah, of course, the few things still lingering around the U.S. economy in particular is actually the fear of recession. I mean, with inflation is high, the country may go into a recession. There is actually a fear, yeah, a fear. And of course, when there is actually such kind of fear, there would be hesitation for people to actually put in more money to actually buy stocks. Yeah, buy stocks if they can't even how to say can't even get enough money to actually put on the table on food or on their house or on their fuel, right? Fuel price has also gone up above $100. Yeah, so this is one factor, and then of course the other factor is actually on the also arising from inflation. The Fed is trying to actually control it by increasing interest rate. That will actually still continue and all the rate hikes will actually come in monthly. Yeah, so that's the other one. Then of course the other factor that is actually affecting the global economy, right? The global economy, one of it is actually on the Ukraine Russian conflict, right? Ukraine Russian conflict, where what is that, where the issue has actually caused a lot of uncertainties in the European region in particular, but of course it also spread through over the world, because we really don't know at the end of the day what worst situation can actually happen there, where at the press of a button everything is gone. Yeah, so we do not know, so that is also one uncertainty there. And also that besides the high energy costs, which is experienced worldwide, is is also causing economics. The other one, which is still the other problem, that the global problem which we still have, is China. Yeah, China, and of course, China has still not gone out of the COVID control phase yet. Because they want to have zero COVID policy, and because of that, they continue to actually lock down cities, which is having this COVID infection spread situation. Yeah, and of course, the initial few months ago, starting from I think January or February, they started to actually lock down Shanghai region, and of course, right now it is actually slowly opening up or easing the lockdowns, but the spread has gone to other major cities, now going over to Beijing. But of course, if Shanghai can come out of this COVID lockdown, then a lot of industries itself would have already started to actually operate, because Shanghai area, right, is actually one of the largest manufacturing hub for China. Yeah, and of course, Beijing is the capital. It's also a big city, but of course, it might have less effect over that side. Yeah, even if they actually start to lock down that city. Yeah. So these are the few things which are different. Then of course, because we still linger around all these problems, we actually expect the market to actually so-called, I mean, that is my personal view lah. Yeah, I mean, you might share the same, you might not. Other people might say we are going to have a recession, or we are going to have a a bull run. Yeah, for me, I'm not that optimistic, but of course, on and off, we might have some short bull run within a bear uncertain market. Yeah, like yesterday, it was one, and of course today we would currently see the market right. It is uh, and even if you are trading or even if you are investing, then of course the uh, how to say the strategies which we implement and also the mindset that use the so-called we tend to actually slightly shorter of trading and of course I would say short term anything more than one I show this. Okay, so what one is saying now market is more fat than FOMO. Yes, yes, people more fat. Yes, more fat means people are actually talking talking bad more bad things in the market lah. Okay, FOMO. I think people had a lot of people had already burned their money when they actually FOMO, okay? Because there were a lot of times when there were actually retracements, right? People were actually buying the dips, and the dips are actually getting deeper and deeper and deeper, okay? Deeper and deeper and deeper, okay? So of course, we do not know how deep it can go, but when the market has actually gone to about 3,800 over points, it's quite deep. It is quite deep already. But of course, because like I said, the few uncertainties are still there, there might also be things that triggers it to actually go even deeper. We there is possibility, yeah. But of course, if you are talking about investing, right? How to say like stocks like Amazon and Google, right? I mean, as far as Amazon and Google is concerned, if you look at the charts, right? Let's put up the charts, right? Maybe it'll be a bit slow. I confirm is a bit slow. Okay. Um, mm, on Amazon on retail, right? The sentiment is actually still negative. If Walmart has actually dropped now 20 over 30% after the earnings. The Walmart earnings, right? It fell through most of the other retailers like Target. What is that? Dollar General has also been affected. Okay, this is actually Amazon, right? Yeah. So if you look at Amazon, right? Okay, this is Amazon here. Okay, Amazon, if it has actually came down quite a lot. In fact, of course, even for myself, I was also one of those people who bought Amazon, right? During this retracement here, and of course 2003 to 2004. Personally, I have also uh, uh, some Amazon two no two one two one and the worst is actually is uh, two gains. Then of course uh, it might sorry, where did I lose you guys? Okay, because the stream got cut off, and just now I was actually talking about Amazon. Okay, did 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 you guys hear my view on Amazon? If yes, the live stream in front of me because I was talking and then suddenly I saw the screen off. Okay, so as I said, compared between Amazon and Google, right? I would pick Google. I would pick Google. Many because Amazon is actually still largely a big part of it is on the e-commerce side, e-commerce business, right? In the retail selling things and all this, which is currently not in a good position. Yeah, if you look at all the retail sector earnings, yeah, and of course because of also the supply chain disruptions, right? Some of the goods might be delayed, and we might also face some sales which is actually lost in this segment. Yeah. Uh, and of course, like I said, the only consolation with Amazon, if you actually want to buy it at this price, is to hold it is to have the intention to hold it longer. It might continue to drop down, but in July when the stock split comes, the liquidity flash, because the price is cheaper, right? And more people will actually buy and trade it. Might help it out a bit. Yeah, might help it out a bit. In terms of the short-term movement improvement in this pricing, yeah. And like I said, compared to Amazon and Google, I will pick Google, and of course, Google is not so much in the retail, and of course, it is still very much technology driven, and how to say, Google products is actually much still intact, still very much more intact, and I think they are continuously coming out with new products, and of course, although I know that Google has this phone, right? This phone, right? Only recently they have. I saw again on the internet that they are actually launching this new Google Phone 7 or something. Yeah, they have the phone. They have the what else? They have the phone. They have the um, all the other earbuds. They have the watch. They have the watch. Yeah. So Google is also something similar to Apple. Yeah, yeah, because they are going into the areas where Apple is doing on the phone side, the watch side. That means basically the things that the lifestyle things that people actually want to have. Yeah, so this is a market which they are going in. And then the other areas which Google is in, the advertising, of course, they are a big player in this area. And of course, when people don't like Facebook, right? When people don't like Facebook, they also move over to their advertisements to Google. Yeah. So given a choice, if you cannot buy two, personally, for me, I would pick Google. But again, something is happening in the market. Both of the companies today, the pre-market price is going down by more than $100. Yeah, more than $100. So I do not know what is that. Google also has. So if anyone knows what's happening, any news, any people throw a bomb out, right? Please put on the posting. Yeah. And Google also has the stock split. Google also has the stock split, which is coming in, I think, next week. First early June. The Google stock split is earlier than Amazon. Yeah. Okay, let's go back to the charts. Hope the thing is okay. Okay, so this is Google. You see, pre-market is 2140, now it's 2229, right? So it's about $100 down on Google. What about other stocks? Let's say Apple. Right. Apple. Apple is also down by, see the Nasdaq futures is down, right? But of course, I think yesterday itself, before the market open, the Nasdaq, yeah, but when the market open, the rallied down a bit. Then subsequent to that, they went not all the way up. I mean, in uh, several also, they also went up. Yeah. Okay. So the other right, we also talk about the sector, the heat map, right? And of course, one of the sector which I actually mentioned that we this is not turning. We did quite well on the healthcare sector, where of course defensive one actually did quite bad uh, last week. Of course, mainly uh, because it was actually pulled, pulled. I hope you guys are getting me, and I'm not lagging, because I see I see actually, like I said, you might be with. Uh, so these are the two of course we this time when we do not so so are the people. Okay, sorry, care is actually one sector lah. I mean, if you want to actually be a bit on the safe side, then healthcare is still okay. I mean, UNH would actually be one good good candidate lah, good candidate uh, already did their retracements from the high of about 500. Uh, Yeah, because of the bad connection, I probably can't talk much anymore. Okay, like I said, UNH has already done a big retracement from its high. You see, just only about here. It went up by quite a lot here, and it's actually quite healthy for this. It actually came down here about 16% from its high already. And of course, if you look at the channel here. Mm, I go to make a complaint. Okay, yeah, we're back. So anyway, in UNH chart, right? I shown just now. Um, okay, okay. Yeah, trading UNH, right? Careful, uh, because the pricing for the options actually a lot. Don't don't be select option price puts in not be the right. You need to be a people you monitor the movements of agents. Okay. Okay, most of people are already gone home. Okay, anyway, I mean, I think I won't want to continue so anymore because the line is actually quite bad. Let's do it another time. Yeah, let's do it another time. And if you have any questions, maybe I'll just answer the questions before we end the show. It's also not too nice for you guys to continue waiting or probably hear half of what I say. Yeah. So yeah. So this time we were talking about UNH. If you're trading options, just be careful about the options pricing. Just monitor it a bit before the time to get the full premium out, even if you're out of money, will be actually it will only come in towards the end of the trade somehow. Yeah. Okay, so the market now rate, right? Okay, so the market now rate. So don't be so bullish in your trades. And because it is actually quite volatile, right? I would tend to actually go on more neutral, still go on more neutral trades, which benefit from either direction, either direction. And in fact, actually today I wanted to share with you guys this strategy on iron condor, right? Yep. So if those guys who have already know iron condor, right? This is actually also an okay time for you to actually deploy an iron condor strategy, mainly because of the high IV, which you get more premium, and also you benefit by from the price going up and also going down, as long as it trades within the range of the iron condor wings, right? You would actually be fine, and you can actually just do an iron condor on SPY or SPX. It's also okay. The only thing which you need to care of, I would say, is on the call side. On the call side, because the market has already dropped so much, right? And of course it can continue to drop, but of course the tendency, the chances for it to actually drop more, to do a quick rally up, is higher, right? And you will be how to say, you might get caught if it suddenly rallies up during when you're holding the trade close to expiry. So even if you're trading this, right, you actually need to actually monitor, and once the strikes gets close, right? That means basically further away lah. Basically, if you're doing an iron condor, if the price actually drops, right? If the price actually drops, right, you may want to cut off the call wing. That means exit the call side, yeah, while keeping the put side, which might be in loss, but overall you still profit because the call side is profit, right? You might need to cut it because uh, uh, to get the full benefit, if the market price actually goes back up, right, then you won't need to actually suffer less profit from the call side, because you have actually already extracted most of the call profit. And of course, on it can also happen on the other way. If it's actually going up, then of course if you want, you can actually chop off the put side to take the profits, while taking a loss on the call side. Overall you still profit, but on the single um, single leg position on the bear call spread, right, you will probably see a losses, right? Then you hope that the price actually comes back down, or you out of the money towards expiry. Yeah. Okay, so that's how we can actually do neutral trades and manage it during this volatility. High probability retrace after heavy selling. Yeah, so that's the thing lah. I mean, high probability of retracement. It goes both ways lah. It goes both ways. It goes both ways lah. Yeah. when the market rallies, the subsequent to that, then they will have a huge sell off to take profit. And of course, when the market comes down, have to come back in. Yeah. Okay, so that's how we manage trades. Not on the conventional way. We see how the where the market direction goes, then we actually manage it accordingly. Yeah. So okay, that's all from me. So sorry that the we have not been able to share a nice full uninterrupted session today, and we'll do it the next round on Trader Stock. Yeah. So until then, trade safely and hope you have a great trading week this week. Yeah, whether red or green, yeah, you can still profit from the market. Yeah. All right. Thank you. Bye bye.